Hi traders. So I noticed in last week's COC data that asset managers have increased their net short exposure to the Australian dollar. So should we as traders be on guard for a bearish breakout? I'll start on the data here that asset managers net short exposure increased with this fall with the dotted or the dashed black line. And that's on a pickup of gross shorts and a fall of gross longs. It wasn't a huge change in large speculators, but they do remain predominantly net short. Meanwhile, you've got this Aussie dollar in this very tight weekly range. So the first thing I want to highlight here is that this is weekly data and asset managers are real money accounts. So whilst you need to listen to them, it doesn't necessarily mean that the Aussie is due to fall now because what we saw in last week's data, but it would suggest, I think it is in need of a pullback on the weekly chart, but that doesn't necessarily mean the Australian dollar is the best one to look at over the near term. So I've got the Aussie weekly on the left and the daily on the right, and zooming in a little bit, you can see that there's some upper wicks, lower wicks. There's a bit of a chop fest on there. Price action isn't great, and on the daily chart that's even worse. It's really not a particularly nice pair to be looking at on the daily chart. If you had to, you're probably looking at range highs for bears or range lows for bullish setups. And because of the messy nature of it, if you had to trade the Aussie dollar, personally, I'll be looking at maybe the scalping timeframes or certainly much lower timeframes, simple strategies such as daily highs, reversals. But until we get a significant shift from the US dollar, it's hard to justify a bearish breakout over the near term. So whilst asset managers are increasing their short exposure, and they're usually the right one to listen to, I don't think now is the right time to assume a bearish breakout just yet on this. And there are other ones to look at which I think are better. For example, if we look at Euro Aussie, we've had this really nice pullback on the weekly chart. You had that 4 weeks or 6 week corrections, and you had this lovely spinning top doji, which held above that 2024 high. Momentum's higher this week. Now, if you actually zoom in on the daily chart, I do like how we've got this ABC move, or 1, 2, 3 move, I should say. And zooming in further, that swing low kind of held above within this congestion area over here. We've got this, what looks like it wanted to be a bullish engulfing or possibly bullish outside day. A little bit hard to see this far back. Anyway, you can see that momentum's clearly pulled up here. So for me, as long as we hold beneath these lows here, any sort of pulls back within that range, I think I like the look of that for potential long. Now, I'm not looking for anything significant here, but maybe it's up to 108 or 1.78. Something I'd like to remind you that I did a video, I think, or an article maybe a month or two ago, pointing out that trouble could be brewing on the higher time frames because the April candle looked eerily similar to the 2020 high, and that could suggest we've got weakness coming to the Euro Aussie over the coming months, but that doesn't mean it can't rise over the near term, and I think the daily chart looks good for a bullish setup over the near term in my view. Now, pound Aussie is a little bit similar. I don't like it as much though. When you look at a little bit tall on this one, so I'll tell you why. You've got a lovely move higher on the weekly chart with this nice pullback in an uptrend. So on that metric, it looks quite nice. But then you look at the monthly time frame, you've got this quite prominent candle, which saw a false break to the 2020 high, now we're back beneath it. And then when you look at the daily time frame, there's a lot of mess here. So if Euro Aussie goes higher, the chances are pound Aussie will probably go higher as well. But it's not as nice a price action as I like to see for the kind of way that I look at price action. A little bit of a cleaner move perhaps is Aussie Kiwi for a short. Had this nice bounce from trend support. We've had a multi-week correction now that stalled around prior support levels. And again, we've got this bearish engulfing day. So the core bias for me is a move lower, maybe towards these swing lows. It's always a question of how can you milk the reward to risk ratio to justify it. Now, I like the fact we've got this inside inverted hammer. So maybe everything's doing a little bit of a bounce, and that could help improve the reward to risk ratio. So while prices remain beneath this zone, a move higher could be beneficial for a better entry for bears to go for a short setup. And just wrap up on Aussie Yems, I think we have to talk about it. It's probably the preferred Aussie cross of all of them. And I think it's of interest, but I think now is the wrong time unless we get a significant macro move. purely on a technical basis, we've seen this decent bounce. I like that it's still beneath that March high and the 96 handle. Momentum's turning lower. It's possibly looking at some sort of a head and shoulders top. Can't be sure. The thing to watch out for, though, is 92, or the zone around 92, has proven to be quite pivotal in recent months, or since March at least. You can see these lows kind of held above it. We crashed through it. Then it became resistance back in April. Then it became support back in May. Now is it turned to be support again? So, like I say, if we don't get a macro move to force this lower pretty soon, I think we do run the risk of at least a small bounce. But again, that could provide opportunity for bears to look for short in anticipation of a bearish breakout and increase that risk ratios. So, just to summarize, asset managers have increased their net short exposure. That doesn't necessarily mean Aussie US dollar is the best short there, and my preferred long, if I had to, would be Euro Aussie. Anyway, if it's useful, wish you best of luck with your trading.